Joining us now, Linda Duessel, Senior Equity Strategist at Federated Hermes. Linda, great to have you with us.
Good morning.
Does your outlook for equities change at all given the FOMC minutes?
No, not at all. We think that Jerome Powell was very clear in recent months that he's going to be very aggressive here in trying to get inflation under control. I don't think anything that he said in the minutes or anything that was revealed there would change that. So we need to brace ourselves that, I think more and more people are coming out and suggesting yet another 75 basis point increase this month, and maybe then another 50 basis points. So still fairly aggressive. And that doesn't change anything in the outlook as to what we're facing.
What camp were you in before, Linda? I mean, I'm just curious if you thought we are in a recession or a recession was in the cards. I just want to get your take on how you interpret the pullback in yields, the reversal in some of the commodity prices that we've seen lower. Is it that, things are improving and so therefore maybe there's a soft landing in store, or are we actually pricing in a recession? The declines in commodities reflect the notion that there will be less demand for these goods?
We're dealing with a lot of cross currents right now, so that's why we're kind of neutral, honestly, at Federated Hermes. Things could go okay, but we've really got a lot of concerns going forward. So I realize that the yield curve is fairly flat. But the economy is still very strong. And what we're noticing in these economic statistics that are coming out is, yes, they're coming off a very strong number. So you're seeing a lower number, lower numbers, but still quite strong. So elevated still. And still a lot of money in consumers' balance sheet and still very strong balance sheets on corporations. So even if we're bracing now for the second quarter earnings reports and we're expecting probably some nastiness and maybe broadly in terms of outlook, the economy is still quite strong, which means that the Fed will still feel that they can be emboldened to continue to raise rates. Therefore, if we're in a recession right now, it's only a technical recession. Job market is still too strong. Too many people still out there for, I guess, twice as many job openings as there are people to fill them. So we don't expect a recession anytime soon. But it's going to be, it's going to be can break either way. That's what's very difficult right now, trying to navigate the markets.